Imagine a company, maybe one you've barely heard of, tucked away in Taiwan. It quietly powers almost every single piece of advanced technology you touch. Seriously, from the smartphone right here in your hand to the most cutting-edge AI that's driving innovation everywhere, its influence is just massive. Welcome to this deep dive into the truly fascinating world of Taiwan's Semiconductor Manufacturing Company, or TSMC. This is everything you need to know about finance. And look, let's be super clear right at the start. This is just our deep dive on this incredible company. It is definitely not financial advice, okay? We're just here to pull out the most important insights, maybe some surprising facts to help you really understand TSMC's huge influence and, what's happening in their world right now. And hey, if you find this kind of content interesting, please do like and subscribe. It really helps us out. And just a quick look at the market situation. TSMC, it's currently trading near $11,175 Taiwan dollars on the Taiwan Stock Exchange. That's around $241 in US markets, give or take. Looks like a mild intraday loss today, but honestly, don't let one day fool you. TSMC has been on a really impressive run. It hit a record high back in February 2024, NT $709, closing at NT $697, up 8%. And that surge was definitely influenced by, soaring price targets for chip designers like Nvidia, who are major customers. And looking back further, TSMC has shown incredible long-term financial strength. Think about this, a 17.4% compound annual growth rate in revenue.
And a 16.1% CAGR in earnings since it listed way back in 1994.
That's remarkable consistency.
It really is. And they've shown a strong commitment to dividends, too, paying out, US $11.3 billion in 2024.
And importantly, they haven't reduced their dividend per share since 2004. That says a lot about their stability and confidence.
Absolutely. Okay, so let's unpack this giant. At its core, what is TSMC and how on earth did it become so vital to the tech world?
Well, fundamentally, TSMC is the world's largest dedicated semiconductor foundry. Think of them as a pure-play manufacturer. So they don't design the chips themselves. Instead, they produce them with incredible precision for hundreds of other companies who do the designing.
The ones we usually hear about, like Apple or Nvidia.
Exactly. And this whole business model, TSMC actually pioneered it back in 1987. It was frankly revolutionary. It allowed what we call the fabless IC design industry to really take off, meaning companies could focus purely on innovation and chip design,
Right.
without needing to sink billions into building and running their own massive chip fabrication plants, or fabs. So that pioneering spirit goes right back to the start. How did it actually, begin? What's the origin story?
It's quite unique, actually. Founded in 1987 by Morris Chang. But the initial funding wasn't typical venture capital. The Taiwanese government put in a significant chunk, 48% of the startup capital.
Okay.
And Philips, the Dutch electronics giant, contributed 27.5%. And Philips didn't just bring cash. They transferred critical technology and patents, too.
So a kind of public-private partnership almost.
Exactly. And what's really fascinating is how from those beginnings, they didn't just build a successful company. They essentially created and then came to dominate a whole new segment of the semiconductor industry. Their model enabled countless other innovators to emerge and thrive because TSMC handled the incredibly complex and expensive manufacturing part.
And you mentioned their customers. Today, that list is it reads like a who's who of global tech, doesn't it?
Oh, absolutely. It's an incredible roster. You've got the giants, Apple, AMD, Nvidia, Qualcomm, MediaTek. But interestingly, even companies that do have their own fabs, the integrated device manufacturers, or IDMs like Intel and NXP, they also rely on TSMC for some of their most advanced chip production. That really underscores TSMC's position. They're indispensable.
The scale just seems mind-boggling. I saw figures like producing over 11,000 different products. What does that look like in reality?
It's hard to grasp, truly. In 2024 alone, they supported clients by making nearly 12,000 different products, using 288 distinct process technologies. That's versatility. They serve hundreds of customers globally and operate with the world's largest logic capacity. Picture this, producing over 16 million 12-inch equivalent silicon wafers in a year.
Wow. And each wafer holds hundreds, thousands of chips.
Depending on the chip size, yes, hundreds, sometimes thousands. It's immense volume. And this massive output and technical capability directly translates to their market leadership. They hold around 34% market share in what they call the Foundry 2.0 industry.
Okay, Foundry 2.0. What does that term actually encompass? Is it just making the chips?
It's more than just the manufacturing step. Foundry 2.0 covers sort of the whole advanced chip production lifecycle. Everything from helping with the initial design enablement, the mask making, the actual wafer fabrication, right through to the final packaging and testing of the chips. By mastering this whole integrated process, TSMC exerts, huge influence over the quality, the speed, and the innovation happening across global tech. They're not just following orders, they're enabling what's possible.
That makes a lot of sense. Okay, so moving beyond their origins and scale, how does a company that's essentially a manufacturing partner achieve such consistently stellar financial results and maintain this dominant technological edge? This is where it gets really interesting for me.
Yeah, it really boils down to relentless execution, strategic foresight, and just continuous reinvestment in their core capabilities. Their financial performance speaks for itself. You mentioned the long-term TAR-GRs earlier, 18.2% for revenue, 17.9% for earnings since 94. That's sustained excellence.
Incredible numbers.
And they're not slowing down. Their strategic financial goals for the next 5 years, 2024 to 2029, are ambitious. They're targeting revenue growth approaching 20% CAGR in U.S. dollar terms, a gross margin consistently at 53% or higher, and return on equity over 25% through the business cycle.
And they manage this with a strong financial position, right? I heard the term fortress balance sheet.
That's exactly what analysts call it. They have the highest credit ratings in the semiconductor industry, AA from S&P, AA3 from Moody's. And critically, this strength is built almost entirely on internally generated funds. They fund their massive organic growth themselves.
And that operational strength, it really came through in their latest results too, didn't it?
Oh, absolutely. The mid-year results ending June 30th and the Q2 25 earnings call on July 17th. They were remarkable. Net income jumped over 60% year over year, 60%, to nearly 400 billion Taiwan dollars. Wow. And revenue climbed almost 40% to over 930 billion TWD. These aren't just abstract numbers. They reflect huge demand for their most advanced chips and really slick operational efficiency.
Beyond the financials, they often talk about a trinity of strengths. What exactly are those pillars?
Right. That's key to their philosophy. It consists of technology leadership, manufacturing excellence, and customer trust. Their technology leadership isn't just about being first, though they often are. It's about consistently pushing the boundaries. For instance, they were the first foundry to actually commercialize ASML's extreme ultraviolet lithography technology, EUV. That was with their N7 Plus process.
EUV lithography. Sounds super technical. Can you break down why that's such a big deal, maybe in simpler terms?
Sure. Think of making chips like printing microscopic circuits onto silicon. EUV uses a much shorter wavelength of light, like using an incredibly fine pen instead of a marker.
Okay.
This lets TSMC etch much smaller, more intricate patterns, packing billions more transistors onto each chip. That's what makes your phone faster, AI more powerful, data centers more efficient.
Got it. So it enables smaller, faster, more power-efficient chips.
Exactly. Their N7 Plus process was the breakthrough that brought EUV into high-volume manufacturing. And they haven't stopped. They've been mass-producing 3-nanometer chips since late 2022. And the roadmap includes mass production of even more advanced 2-nanometer chips starting in 2025. This constant push keeps them ahead.
And the second pillar, manufacturing excellence. That's about more than just building lots of fabs, I assume. It's about precision and efficiency at scale. I also saw something about them phasing out older production lines.
Precisely. That recent announcement about phasing out their older 6-inch wafer production over the next 2 years, that's a perfect example. It shows their relentless focus on efficiency, shifting resources to the more advanced and productive 8-inch and 12-inch fabs. It's continuous optimization. And the third pillar, customer trust, is crucial too. Their open innovation platform is a major part of this. It's basically a collaborative ecosystem, tools, libraries, support that helps their customers design complex chips more easily and quickly. It's enabled something like 85% of all semiconductor startup product prototypes worldwide. That fosters deep partnerships and loyalty.
It's also worth highlighting their sustainability commitment, isn't it? Pledging 100% renewable energy by 2050 via RE100.
Yes, and that's a huge undertaking. They were the first semiconductor company to join RE100. Considering they use roughly 5% of Taiwan's entire energy consumption, that commitment is massive.
Yeah. And being in the Dow Jones sustainability indices for 24 years straight also says something.
Absolutely. And if you connect all this back to the bigger picture, their unwavering focus on these three things, leading technology, world-class manufacturing, and deep customer trust. That's the engine that lets them confidently push the boundaries. It directly shapes the capability of basically every advanced device we use. They're enabling the future of tech itself.
So looking outwards now, what does all this mean for their global strategy? We're definitely seeing TSMC expand way beyond Taiwan, but that seems to come with a whole new set of geopolitical and operational challenges. Why this big global push now?
You're right. The global expansion has really ramped up since the early 2020s. And the primary motivation really is risk mitigation, business risk. Specifically, they're looking to diversify their manufacturing footprint. Partly, that's a hedge against potential geopolitical instability, especially the tensions between Taiwan and the People's Republic of China.
The elephant in the room.
Pretty much. But it's also a direct response to the supply chain disruptions we've all experienced globally in recent years. Remember the chip shortages?
Oh, yeah. Couldn't buy a car or graphics card for a while there.
Exactly. So this expansion is a strategic move to build resilience and ensure a more geographically distributed supply of critical chips.
That makes total sense. Let's talk about the U.S. then, specifically Fab 21 in Phoenix, Arizona. That project sounds absolutely monumental.
It really is. It started as a, let's say, $12 billion commitment for 5-nanometer production.
Yeah.
But that has significantly ballooned. They've announced plans to triple that investment to around $35 billion, aiming for potentially 6 factories in total there. And the U.S. government is backing this significantly through the CPS and Science Act. They got $6.6 billion in grants and access to up to $5 billion in loans.
Huge numbers. But I've definitely heard reports that it hasn't all been smooth sailing in Arizona. What are the main challenges they're facing there?
You're right. There have been significant hurdles. Reports suggest construction costs are way higher, maybe 4 to 5 times what they'd be in Taiwan.
Wow.
And finding enough qualified local workers has been a major issue. It's led to delays and the need to bring experienced workers over from Taiwan.
And train U.S. workers over there too, right?
Exactly. All of this complexity and cost means the chips produced in Arizona are expected to cost at least 50% more than those made in Taiwan.
That's a big premium.
It is. Though interestingly, their CEO, C.C. Wei, just said in July 2025 that they plan to speed up the production timelines. This follows an additional $100 billion investment plan for Arizona over time. The goal is ambitious for 30% of TSMC's 2-nanometer and even more advanced chip capacity to eventually come from this Arizona gigafab cluster.
100 billion more. That's staggering. And they're building a whole community around it too. Halo Vista.
Yeah, that's the plan. A supporting development with housing, restaurants, even a research park right there in Phoenix to support the massive workforce needed for these fabs. It shows the scale of the long-term commitment.
Okay, so Arizona's huge. But they're not just betting on the U.S. They've made major moves in Asia and Europe as well.
That's right. Diversification is key. In Japan, they've established JSM Japan, Advanced Semiconductor Manufacturing. It's a joint venture in Kumamoto with partners like Sony, Denso, and Toyota. The first fab there actually became operational in December 2024.
Already running.
Yes, and a second fab is under construction, focusing on slightly less advanced, but still critical, 6-nanometer and 12-millimeter processes. And they're getting significant subsidies from the Japanese government.
And Europe. Germany, I think.
Correct. In Dresden, Germany, they're setting up ESMC, European Semiconductor Manufacturing Company. This is another joint venture, this time with European auto and industrial giants, Bosch, Infineon, and NXP. TSMC is putting in $3.5 billion towards a factory expected to cost over $10 billion in total, with the German government providing a hefty $5 billion subsidy. That one's planned for full operation by 2029, aimed squarely at bolstering chip supply for Europe's automotive and industrial sectors.
So these massive global investments highlight this imperative for diverse chip sources, but also the sheer complexity. And the challenges aren't just about building fabs, are they? There's this constant backdrop of geopolitics and supply chain fragility. Like just this August 2025, there was that worrying news about alleged espionage. Current and former employees accused of leaking trade secrets about their cutting-edge 2-nanometer process.
Yes, Taiwanese authorities made arrests, while TSMC stated the leak likely wasn't critical because of how they compartmentalized their intellectual property.
Still, it's a stark reminder of the high stakes and security risks involved when you're the leader.
Absolutely. And then you have other unexpected jolts, like that fire at Kanto-Denka Kogyo in Japan.
What do they supply?
They're a critical supplier of nitrogen trifluoride, NF3. It's a highly specialized gas that's essential for etching the microscopic circuits onto the silicon wafers.
Ah, so a key chemical.
A very key chemical. A disruption there sends ripples, raises alarms about potential bottlenecks across the entire semiconductor supply chain. Even a short disruption can be a big deal.
And politically, things keep shifting too. Talk of potential U.S. tariffs on semiconductors.
Right, under Section 232. Though there have been signals suggesting that companies like TSMC making substantial investments in U.S. manufacturing, like in Arizona, might get exemptions, but it adds uncertainty.
And meanwhile, China has apparently criticized Taiwan for, quote, ceding TSMC to the U.S. because of these huge investments.
Yes, that narrative is out there. Taiwan's government, naturally, pushed back strongly, framing it clearly as strategic global expansion for resilience, not relocating their core operations or technology base.
It really is a delicate dance, isn't it? Investing globally for security, but navigating intense political scrutiny and operational headaches at every turn.
It truly raises a critical question. In this world of, frankly, information overload, complex global supply chains, and really volatile geopolitics, how does TSMC keep managing these dual pressures? The pressure to constantly innovate technologically, and the pressure from these external political and economic forces. It's a fascinating balancing act. These geopolitical currents are becoming almost as critical to their future as their next process node.
So let's try to pull this together. TSMC is, without doubt, the indispensable backbone of modern technology. That seems clear. They're a financial powerhouse, delivering consistently strong results, and now they're strategically planting flags around the globe, reacting to these complex geopolitical and supply chain realities.
And their future. It definitely involves that relentless push toward ever smaller process nodes, 2 nanometer than whatever comes next, like 1.4 millimeter or A14 as they call it. This keeps them absolutely crucial for next-gen tech, especially AI. But alongside that tech race, they're navigating this complex global landscape, balancing their worldwide presence with the very real operational challenges in each new location. It's all about maintaining leadership and resilience in what's clearly an increasingly complex world.
Which leaves us with a final thought to ponder. As TSMC continues forging the literal building blocks of our digital future, how will its unique blend of technological dominance, strategic global expansion, and sheer resilience against all these external pressures, how will that not just shape the semiconductor industry itself, but perhaps fundamentally redraw the map of global economic and political power? Something to think about. Thank you so much for joining us on this deep dive.